Hello and welcome back. This is Christopher Aaron. This is the iGold Advisor channel. It is August 17th, 2023, and we are going to talk about today the most important battle that gold is facing. I do not know a single other analyst on the face of planet Earth who is talking about this battle. It is gold versus the U.S. stock market. This is going to determine the future of gold for the next 10 to 20 years. And I do believe the evidence shows that this will be resolved within the next 6 to 18 months. So if you're investing in either gold, silver, the gold and silver miners, the U.S. stock market, or U.S. dollars, you must pay attention to what is happening here in this battle. So what we're going to do, I'm going to show you a free portion of the premium member video that just went out today, so you can watch all of what's happening here with this battle, take away the best information, and then make the best plan for yourself going forward. So let's get into the free member video that just went out today for premium subscribers. Before we do that, make sure you hit the red subscribe button so that you know when these videos come out on YouTube. You should also hit the bell icon so you'll receive notifications when these come out. And guys, as you might see, I don't always post videos here on YouTube, but if you follow the free account on Twitter at iGlobalGold, you will see updates for free much more frequently. So let us get into this free member video for premium subscribers. So I've alluded to this a few times here over the last number of months, how we are living through an anomaly right now, a historical anomaly. And I want to show you how serious I am about this. Where when we look at gold and the Dow Jones Industrial Average, which is the longest dated stock index that we have data going back to the mid-1800s, pre-industrial revolution data. This is a fantastic index. And it tracks the S&P 500 with something like a 96% accuracy. So it's perfectly acceptable to use the Dow Jones Industrial Average as our metric to compare to gold. And look at how these two things for the last year here have been tracking each other so well. Yes, not on a one-for-one on every single daily basis, but look at the general trend here between the U.S. stock market and gold. And notice how that over the last year, they end up within a couple of percentage points of one another, and that the general trends, when the stock market is rising, gold is rising. When the stock market is falling, gold is not able to rise very much. When the stock market starts to rise, gold is able to rise. But then when the stock market falls, gold falls with it. Starting in March, gold rises, the stock market rises, right? I mean, you can see the correlation here over the last year. The point that I'm trying to make is that this is a historical anomaly. Wait until I show you even more evidence. Let's back this chart up. We are now looking at the last 8.5 years. And look at how this correlation here has been ongoing this entire period of time, where we've had gold prices that have nearly doubled when we're talking about getting into the peak levels, up over 90% since the 2015 lows. And we also have the Dow Jones Industrial Average that has nearly doubled during this exact same period of time. Doesn't this seem a little bit strange to you? That stocks and gold have basically matched one another on a one-for-one basis over an 8.5 year period? Why is that? Why does it seem like all the markets are correlated right now? Well, we'll answer that in just a moment. 8.5 years, both these major asset classes tracking one another over multi-month periods quite well. Let us zoom it out even further. And now this is why I want to bring this point and hammer it down hard. We were just looking at this the last 8.5 years. When you look at the same comparison here, we were just looking at it one over the other. Now we're looking at it as a ratio. The Dow Jones Industrial Average to gold. This last 8.5 years, where it's been moving sideways as a net sum, this has never happened before. I don't mean this hasn't happened before in the last 10 years, the last 20 years. This has never happened before in the history of freely traded precious metals. Look, my apologies. I could have extended this chart back to 1971. And in fact, let me go dig that one up for you. Okay, there it is. Dating back to 1970 with the introduction of freely traded gold. And you can see why I typically focus on this period from the late 1970s through the present is this is the major generational low at 1-to-1. And so the current pattern, this triangle pattern here, dates back to 1980. But making the point even more clear that this, what we've seen here over the last 8 years of sideways Dow to gold ratio. In other words, the Dow rising nearly 100% and gold rising nearly 100% over the same period. This has never happened before. This is extremely odd. This is an anomaly. There has never been a period this long where the Dow and gold are both moving in the same direction. You can see generally this thing makes gigantic swings either in favor of gold or gigantic swings in favor of Dow. Gigantic swing in favor of gold and gigantic swing in favor of the Dow. This sideways type price action has never happened before over a period as long as we've seen it here, dating back to 2015. Yes, have there been a period of, let's call it 2.5 years here in the mid-90s where the stock market was somewhat stagnant and gold was somewhat stagnant? Yes. Yes, was there a period of 2 years here in the early 2000s where the same thing happened? Yes, but never over a period as long as we have seen now. So when I say to you that this is an anomaly, that we're living through something extremely strange, please know that we have the data to support this. And back to the present moment, this is not going to continue. We are not going, when we're looking back 3 years from now, we are not going to be looking at charts that show the dollar rising and everything else moving opposite to the dollar. Within the next 6 to 18 months here, this chart is getting ready to break in a generational type of manner. It is either going to break upward, in which case we're going to have the Dow outpacing gold for perhaps 1 to 2 decades following that, or it's going to break lower, in which case we're going to have gold and the precious metals complex outperforming the Dow for at least another 10 years following that break. The entire reason why the gold and silver miners have not performed well to date is this chart right here. This sideways price action in the Dow to gold ratio means that a lot of investors are nervous still about gold. A lot of investors do not believe that this move in gold is for real, and they're not willing to commit to the mining sector as a result. If this ratio breaks out in favor of the Dow, they will be correct on that assessment. If this ratio breaks lower in favor of gold, they will be incorrect, and those miners will play catch up for perhaps another 10 years following the breakout of this. But that is the reason why these miners have underperformed so significantly, not just over the last 2 to 3 years, but really over the course of the last 8 to 9 years. There has been very little conviction in investors that the move in gold is for real, and that lack of conviction is evidenced and visible right here by the sideways price action in this ratio. And for good reason, because if you're a mainstream investor and you can get just as good returns in the Dow Jones index funds as you can holding gold, why would that mainstream investor, which represent over 99% of the population, why would the mainstream investor consider quote-unquote alternative assets such as precious metals? So that explains the underperformance that we've seen here, and this thing is getting ready to sever in a monumental generational type of fashion that I suggest to you that if you are an investor either in precious metals or mainstream financial assets, you cannot afford to be on the wrong side of this break when it happens. You cannot afford to ignore this chart because this is going to tell you whether or not the wind is blowing directly in your face and trying to knock you back and you're taking 2 steps forward and then 2 steps back every other year, or whether you're going to have the wind comfortably lifting you upward by pushing you from the back. Okay, so we have all of this evidence that we have been talking about. Here's the recent weakness in the stock market. We talked about how that coincides with the recent weakness in gold over the last 2 months. All that combined recent weakness evidences in the Dow to gold ratio continuing to move sideways. The breakout has not happened yet. So let's talk about the update on the U.S. stock market here. We've seen about a 5% correction here from the recent peaks. I want to highlight a little bit about what will be the future of my service here as far as the precious metals intelligence, because there will come a day when gold and the sector tops, whether it's in 2024, early 2025, or whether we're fortunate to get that break down in the Dow to gold ratio. And let's say we have mind-blowingly another 10 years of bullish price action in gold. But one way or another, when that top happens, I will start to cover a number of additional markets from a intermediate term trading perspective, because these signals that I've been developing here that rely on primary trends, long-term trends, and short-term trends, you can just see the power of them. You can see here, for example, when we break a 2-year rising trend, notice how the stock market just shows weakness then for the next year, right? And so these are tradable types of events. And then notice the year-long downward trend. Notice when that was broken right here. Initial move, retest, holding, and then what? This rising here. And now notice that we've broken this very steep dashed blue trend here, moving downward now that trend is breaking. The power of trends are not perfect. There's no system out there that is going to get 100% of signals accurate 100% of the time. But I have found that by focusing on daily and weekly charts, this is a daily chart right now, looking at the primary and the long-term trends, it eliminates about 85% of the noise in whatever market that we're talking about. And so part of my future going forward as to what I will be sharing with you is looking at primary trends of gold, silver, the stock market, oil, copper, the bond market, other industrial commodities, and saying, how can we profit from this on an intermediate term basis? Can we time some long and some short signals here to profit from the breaks of these trends as they occur? I've been refining this system here for the last 10 years, and I'm ready to start expanding this. So know that that is what lies in the future of my services that I will have available for you. When we look at the U.S. stock market back here, look, we just look at this from a logical basis. You've broken a very steep rising trend here. There's not a whole lot of support on the chart until we get into this confluence. Look at the black confluence here of resistance centered on this 4175 to 4200 level on the S&P 500. You can see this peak right here. This peak overshot it by a little bit at 4300. So we might get a pause right there at 4300. But then you look at this peak in there at 4175, this one at 4200. Notice the hesitation all in here at 4200. So in my assessment, the U.S. stock market is coming back down over the next 1 to 3 months into the confluence of this 4200 level. And notice how that 4200 level is going to coincide with the new rising support band that began what? At the lows for the bear market that we saw from late 2021. So you have rising support, which will be meeting with horizontal support when we get into 4200, When? About September, early October. So this will represent a moderately strong support level. This is a level that I would be looking to buy stocks on a trading basis, or perhaps if I was looking to be a long-term index fund investor, this is where I would start doing some purchasing. I can't yet tell you if this will represent a intermediate term bottom only or a longer term bottom. From a trading perspective, it doesn't really matter. From a long-term investing perspective, it certainly does matter. So I think this is going to be a question mark here when we come into this zone around 4,200. Do we get continued downside? I wouldn't be surprised by this at all. That would be extremely feasible in a scenario of a rising US dollar. Or do we get stability here in stocks and new all-time highs coming into 2024? Remember that Dow to gold ratio. Something is getting ready to break here within the next 6 to 18 months. Is it going to be a break down in the stock market and therefore gold breaking out versus the Dow? Or is it going to happen in favor of the stock market? We have very, very good trend analysis here. This is a very clear chart in my book. So I think when we come into this 4,200 region, we look at where the Dow to gold is at that moment. We see what's getting ready to set up if we get the breakdown or the breakout. Turning to gold, we are still in the green shaded triangle. We are in a primary intermediate term downtrend. Remember I said in the very beginning, I remember in 2018, I was out visiting my mother in Arizona, and I remember watching this trend forming here August, September of 2018 and charting it for the first time. And here we are, 1870. It's coming back to test this support here. I mean, this could happen, we're at 1890, so this could happen tonight. This could happen Thursday. This could happen Monday morning in Asia, which we typically view as Sunday night in the United States. This is coming any day now. Remember, the primary pattern is still bullish here. And so what I expect is that we're going to come and we're going to test this. And remember I said in the very beginning, I would not be surprised to see a daily close below 1870, actually, scare a lot of people. And then if that daily close happens to be, let's say, on a Thursday or Friday, I wouldn't be surprised to see one weekly close below 1870, if that's this week or next week. But then I think we are going to have a bit of a modest recovery here in gold. Why? Remember, go back to the US dollar. We just looked at it. US dollar, a few moments ago, we said is approaching a primary resistance level that for the next 1 to 3 months should cause the dollar to succumb to selling pressure. So that's happening almost simultaneously with gold here testing its support. I think both of those things are going to happen at the same time, and they're going to happen as inverse type behavior here. So we will see the dollar see selling pressure, and we will see gold witness buying pressure here, bringing us back into the mid-1900s over the next 1 to 3 months. And then the chart as it stands now at this moment of time continues to be a bullish chart for physical gold. If we can hold at support here on dual weekly closes, and then let's say hold as we get into the very end of this year, which is when we would expect the dollar to start rallying again, so that would be a real test for gold. If we can get that, then this chart still is going to break out in favor of gold. If that strength in the dollar was to be so significant that it causes a lot of gold traders to just panic, as they are prone to do in the futures market, then we could be looking at this much more complicated and challenging scenario here, where let's say I still think over the next 1 to 3 months, I think we're going to get a valid support test here, but it would be more like as we get into November, December, that gold would have the possibility, amidst a strong dollar, of failing at this support. Remember, even a failure of this support would not turn the long-term gold chart bearish yet, because this would still look like an inverse head and shoulders pattern. But if gold were to fail here later this year, it would be quite a painful scenario for both silver and the mining sector. So that would be that dichotomy where we would still have an overall constructive gold chart. It's just it's going to need to break out in 2025. But we could have a lot more people throw in the towel, especially on silver and on the gold and silver miners, if we were to see that. So to back up one more time, I think we see strength here in gold starting within the next 1 to 2 weeks, lasting us into the November-December timeframe. I want to tell you right now, if you, in your personal situation, are overexposed to this sector to a level that's causing you discomfort or an inability to pass the sleep test, if that describes you, then into this recovery rally here over the next 1 to 3 months is when you want to start limiting that level of exposure and selling down positions to a point of comfort. If precious metals are only 10% of your overall net worth, then you probably don't need to think about that. But this is really for people that are more concentrated in their exposure. Right? So if that describes you with too much exposure for your personal situation, this recovery that's setting up here within the next 1 to 2 weeks and lasting us toward the later part of this year is your time to reduce your exposure. We only call a top if 1680 is broken here, these lows. And so there's still a lot more room here for this chart to meander if that was, in fact, going to happen. So I stick with the red and the green scenario. Solid orange is our second highest probability, and the top being already in as the third and most distant probability at this point in time. So this has been an expose on this intense battle that gold is witnessing right now in front of our eyes versus the Dow Jones Industrial Average. As you've seen, this has never happened before in the history of freely traded precious metals going back for over half of a century. This is truly unique. If you would like to follow along with us, not here once every several weeks, but to witness our analysis every single week when it comes out, the service for you is called Precious Metals Intelligence. We produce premium videos the way you are seeing every single week, 50 weeks out of the year. This includes, as you can see, our analysis not only on precious metals, but also on the stock market, currencies, commodities. We even cover Bitcoin now, gold, silver, and the mining sector. And this includes the exact open market investments that we are making with buy and sell signals sent directly to your inbox the moment that we are making those decisions. So if you want to follow along with us, the way to do it is Precious Metals Intelligence Plus. If you are a higher net worth investor, you should really understand the power of private placements. Private placements are investments that we make into similar gold mining companies as we do in Precious Metals Intelligence Plus. It's just that we get more favorable terms since we're investing more money into the companies. We negotiate these deals directly on behalf of all of our investors with the companies themselves, and we get the highest leverage since with every investment we make, we get free warrants in addition to the normal shares. You do not get the warrants if you buy the shares in the open market, so that gets you nearly twice the amount of upside when you're doing a private placement compared to the open market investing. And I just want to let you know, we have a private placement open right now with an emerging gold mining company The deadline to register for this is by the end of the day tomorrow, Friday, August 18th. So it's a quick turnaround for this. Make sure to give our office a call if you would like to get involved with this one. If you would simply like to sit down with me and discuss your situation, know that you can reach me on the consultations tab. I am fully independent. I look out for the best interests of individual investors. I do not take any kickbacks or any fees from any of the companies that we feature here, not from any of the bullion dealerships. Whether you're an absolute beginner sitting down for the first time in your life and saying, wow, where do I start with the precious metals? I've never bought gold before. I don't know how to store it. Trust me, we've got everything figured out that individual investors need to know so that you can make sure that you do not get taken advantage of by the dealerships and by these companies. You have to be very careful. There are some good companies, and there are also some unscrupulous ones that take advantage of individuals. So make sure to book a consultation if you would like to sit down and discuss your situation one-on-one with me. I hope you found this free portion of the premium member video to be educational. I hope you will take it to heart and think about what could be setting up here in the precious metals over the next 6 to 18 months, depending on the way that Dow to gold ratio breaks out, is going to have a tremendous impact on the future of the precious metals. You cannot afford to ignore that signal.